So let's just start on the weekly time frame and on the DXY, which I usually do. And of course, if you have any questions, please leave them. But you can see that overall, the weekly, we were bullish, traded up into this order block, into a volume imbalance, a daily volume imbalance, a new week opening gaps, traded down, broke through this consolidation we had for 5 weeks, continued down, took the drawn liquidity which I previously had last week, week 48, also published on YouTube, so you can go and check it out. Took out the drawn liquidity, which was this, and this was actually the 75% mark of this fair value gap. So if you annotate this fair value gap, then you can see that this sell side right here, we're exactly on the 75% mark of the fair value gap. So if you draw out the fair value gap, there is the middle point, the 25% mark, the open, the close, and the 75% mark. So there is 4 different sort of PD rates which price can react with. This was on the 75% mark, and that's why I sort of annotated this as my drawn liquidity, which we traded into, and then we have started to retrace, but we are still bearish on the weekly. You can see here with this market structure shift. And my new drawn liquidity for this week, of course, is this. This is my daily drawn liquidity. My weekly drawn liquidity is right here, but I don't think we will trade down into this during this week, just because we are in December, and December has really bad price action. Something that we will actually range after taking this draw liquidity, range between here and maybe here. We will maybe range downwards, like in a downwards trajectory. But ultimately, I think going into next year as well, we're gonna reach for this fair value gap. So this will be my ultimate draw liquidity, and like this equal lows right here. This is my ultimate drawn liquidity, but this is my secondary drawn liquidity, like before the ultimate drawn liquidity, which I have right here on this equal lows, this sell side. So I'm thinking that overall, the DXY will continue down for a while. You can see that on the monthly time frame, we are also overall bearish with this market structure shift. I'll not talk about the monthly so much, but just note that. And you also can see that we took out this equal lows before moving higher, took out this buy side, and then we moved higher after reacting with this order block. But otherwise, let's go into the daily time frame. And yeah, I forgot to mention that this is the sort of protector fair value gap, I would say. So this I would say we have as a fair value gap, and also this order block. So I just have them annotated. If the market wants to retrace even higher, take out some buy side right here and right here, previously weekly highs, and then trade into this 50% mark, and then continue lower after taking this buy side. But that's more or less one of the least likeliest outcomes. But still have that in mind, that we could retrace for these weeks, just because it's December price action. So we will see exactly what happens. But I'm completely bearish when it comes to the high time frames. Going into the daily time frame, and hopefully this is a good explanation for everything. If you have any questions, please leave them. This is a 4-hour buy side liquidity, and I have annotated this like previously, just because I sent all of this before I talk to my students, so to the premium. So premium gets all of this and gets more or less bigger understanding with market relations and everything, just because they can see the market relation plus the DXY correlation. So they can check EU, check everything I sent, and then also check AU, and like connect the dots, sort of say. So they get, because bear in mind, market relations and DXY correlation is sort of the thing I'm sticking to most of the time. So it's more or less my profession when it comes to ICT. And that's why I opt to more or less only learn the basic ICT stuff plus DXY correlation and market relations, because I feel like that is really important. But otherwise, this is the weekly fair value gap right here. You can see this big daily fair value gap as well. You also have this small fair value gap, which we previously reacted off of, combined with this order block, algorithmic order block right here. And an order block, I'll not explain an order block, but hopefully you understand. Like we took right here buy side, made change of character on a lower time frame, or breakout structure on a higher time frame, moved down, got this displacement right here. So just annotate this as an order block right here. Reacted downwards, continue down, and then we created another order block right here. This is buy side liquidity I'll talk about. So I'm thinking that we may be reaching for this buy side and then continuing down and towards my ultimate drawn liquidity. This is my ultimate lower time frame drawn liquidity. I talked about my ultimate higher time frame drawn liquidity, which of course can change, but this is my stance for now at least. So I'm thinking that with the market will, I'll talk about it later, but yeah, you can just see that this is an 4-hour order block as well, but that higher one, this is a daily order block, daily algorithmic order block. Going into the 4-hour, you can see this is the order block which I am talking about. This right here, took buy side, made a breakout structure on a high time frame, moved down, got displacement. So order block overall. You can also and yeah, this is buy side liquidity. You can see right here, and we also have relative equal highs right here. Also some trend line liquidity, which the market maybe wants to trade up. So I have two scenarios playing out right here. So either or three, but there is two more likely outcomes, which I am opting for to happen. So the first, okay, the market trades up, takes out this buy side liquidity right here, and then continues down into my ultimate lower time frame drawn liquidity. Second, that we will just continue down, taking this and then consolidate for the rest of December. Oh, really sorry for that. My third is if the most bullish scenario. So just because oil prices or fundamentals is pointing that we will actually maybe retrace a bit, so we maybe want to retrace, take out this buy side liquidity which I previously talked about, which matched it up with this weekly fair value gap and the 50% of that weekly fair value gap, take out that buy side and then continue lower. And of course in here there will be some swing highs and swing lows and trading opportunities for you all. But overall, the most likely outcome is that we will continue down, maybe trade a bit higher, take out this buy side and take out this buy side, and then continue lower. Maybe make an ICT power 3 we can see here with the accumulation, manipulation, distribution to the downside. So I forgot to mention the different. So yeah, we can just go into the daily. I'll show you quickly. So you can see here on the daily we are bearish. 4-hour we are actually bullish. You can see with this market structure shift, but now I'm thinking that we maybe will get the market structure shift right here. Otherwise, let's go into the 1-hour. So on the 1-hour you can see this market structure shift. So 1-hour is bearish as well. So that just concludes more or less that why I have the one as unlikely scenario, just because we have them 1-hour market structure shift. We maybe want to trade higher in the Asian session, trade into this 1-hour fair value gap in equilibrium on the highest time frame, and then continue lower. Now when you have sort of this implemented in your head, okay, now we go over to the big pairs. So now we go over to Euro USD and go through that as well. And now, okay, just imagine the DXY in your head. So now just take that and put it as an extra confluence into EU. So going into the weekly, okay, the DXY was bearish, EU should be bullish. You can see here with this market structure shift, macro market structure shift, and that we are overall bullish on the weekly time frame. You can also have this weekly fair value gap right here annotated, You can see we have made a big candle up. So overall weekly is bullish, and this is my drawn liquidity. But my ultimate drawn liquidity is actually, or my secondary drawn liquidity is this. Okay, just if you draw out the fair value gap right here from this this thing to this week, to this week, so draw that out, and then you can see that this matches up with the 25% mark of that fair value gap, this buy side. So then draw out the line, annotate that as the drawn liquidity, and you'll see that we maybe want to go higher and sweep that, and then maybe go lower. Or if the DXY goes to my ultimate sell side point, then we will maybe reach this ultimate buy side point. So because this is my ultimate drawn liquidity on a high time frame. Otherwise, let's just go into the daily time frame. So into the daily time frame, you can see that we have actually, like I previously talked about, retraced from this point after taking this equal lows liquidity sweep right here, and also the DXY. Remember, we took first buy side, and then we traded into an order block combined with a volume imbalance or liquidity gap, whatever you want to call it. A new day opening, no, a new week opening gap. I'm sorry. And then we continued higher, or the DXY continued lower, but for EU we continue higher, making this macro market structure shift. Breakout structure, and breakout structure, and you will see here is the real market structure shift, and now we have made breakout structure and now another breakout structure. So I'm opting for another breakout structure right here, and that we will continue higher. I'll talk about this. This is a 4-hour fair value gap, and you can see here that we have actually made a liquidity sweep, and I'll be talking about not too in-depth market relation, but you will see market relations and why I'm opting for higher prices for EU. So you can see that the daily time frame, overall daily time frame, is bullish. So go into the 4-hour. The 4-hour for the DXY was bearish, which means that it should be bullish for EU, but you can see it's not actually bullish. You can see that we are bearish. So there you have the DXY correlation, why EU will turn bullish. Then you have the liquidity sweep right here from the sell side, traded into this fair value gap, middle point, reacted off of the middle point, traded up, and now I'm thinking that we will see a market structure shift going into Asia session, or maybe on London session tomorrow. Okay, that's my predictions. So I'm seeking higher prices right here into this, which is my ultimate lower time frame draw on liquidity, combined with the DXY ultimate draw lower time frame draw on liquidity. Hopefully this is a good explanation. But you can also annotate this order block. We'll see if it wants to make this a breaker block and go lower, or retrace just into it and then continue higher into the lower time frame ultimate draw on liquidity. Anyways, if we just go into the 1 hour, you can see that the 1 hour is not bullish. You can see that we are bearish also on the 1 hour. But like I said to my students, I'm thinking that tomorrow this will definitely, not definitely, okay, the market could do whatever it wants. Like the DXY could go higher, which just makes the EU pair go lower. But I'll talk about why that is the most unlikely scenario, because you have to think probabilities instead of just thinking, like, it's always good having different outcomes. So, but the most likely outcome right here is just that we will maybe consolidate right here, then maybe continue lower, and then continue higher ultimately. Okay, just because that's the power of 3. So maybe here, right here, we'll see my strategy play out on a lower time frame. So we'll see consolidation, then Asia session will get taken out as a time-based liquidity sweep, and then we'll see higher prices into this ultimate draw on liquidity which I have. So yeah, and we'll also see this 1 hour market structure shift. So higher prices on EU overall. I am bullish. But yeah, otherwise, let's just get right into AU. And now, when you have now when we have gone through Euro USD, now just have this picture in your mind that like the 4 hour and 1 hour were actually bearish, but I'm opting for high prices. So now I'm gonna explain to you what I'm looking for when looking at market relations. So going into AUD USD, the weekly time frame. So you can see that overall AU have been the weaker of the pairs against the American dollar, because this is AUD against the American dollar. But overall we are bullish on the weekly. Okay, you can't see that clearly, but you can sort of see this because we had a big retrace into a deep discount into a liquidity structure on a lower time frame before we retraced, and you could actually have taken a really good trade. Like, you could still be in it if you would have known my strategy. Otherwise, here you have the drawn liquidity, and this is my, like, I'll talk about it later why I don't have the drawn liquidity right here, but that's just because EU right now is the sixth sister, and I'll talk about that later. That's also an sort of thing you can look at if you're wondering about market relations. Okay, and you overall know that DXY is bearish. That just means that pairs against the American dollar should go higher. But yeah, I'll talk about this drawn liquidity which I have. So this is my, I think this is weekly drawn liquidity. Ultimate drawn liquidity is the market taking out this equal highs, and then I'm thinking that we will actually retrace into this, but we'll talk about it later. Like that's really far away from where we are right now. But overall, going into the daily, you can see that we actually swept these sort of equal highs, equal lows, equal lows right here, equal lows right here, or trend line liquidity, swept this, then we exploded, or we explosively moved higher. You can see with this market structure shift, then we traded into a deep discount. Okay, traded into this algorithmic order block, continued higher, made big displacement right here, traded into the 25% mark of that fair value gap, continued higher, traded into this fair value gap, continued low, higher, made this breaker structure right here, and now we have this fair value gap right here. You can have it annotated as if you want. Traded down, took liquidity on lower time frame. I'll talk about it, but overall the daily is bullish. Going into the 4 hour time frame, you can see right here that we traded down, took liquidity, traded up, made this 4 hour market structure shift, and that's just because we made this 4 hour market structure shift previously, and then took out this sell side, traded up, made this 4 hour market structure shift, made this equal highs. Now I'm maybe seeing a retracement, just because everything depends on what the DXY does and EU does next for AU. But I'm thinking that AU will be the better pair to trade in the coming week. That's just because it has been so much more bullish. Remember that the 4 hour is actually bearish, and if we go into the 1 hour as well, so you can see that 1 hour is bullish as well for AU. But remember, EU, okay, and they have correlation. EU and AU have correlation, but you can see that EU is bearish on the 4 hour and 1 hour, while AU is bullish on the 4 hour and 1 hour. This just means that AU is the superior pair to trade if you're seeking higher prices, which we are, because our overall bias is bullish. Remember, that just means that AU should be the better pair to trade. I'm gonna talk about this drawn liquidity right now. So wait, I have to go into the daily time frame. So I'm thinking this is, if I remember correctly. Wait, maybe if we go into the 4 hour, I totally forgot. then maybe the weekly. Like, because I'm thinking this is the 50% mark of a week. Okay, I've done this. I think I've moved this by accident, so it should be this. Really sorry for that, but it should be 50% of that week. Otherwise, let's just go into the 4 hour. Now you can see it's more better placed. So you'll see it's in the 50% mark of this fair value gap. So we may be trading into this and maybe making a retracement or consolidating for a while, just because remember we are in December. So after this drawn liquidity have been taken out, we will maybe consolidate for a while, just because seasonal tendencies, like that seasonal tendencies, or it usually occurs during December price action. If you just go, I'll just talk briefly about the correlation with EU. I just have to make it 4 hour or 1 hour. No, 4 hours better. And also 4 hour right here. So you can see right here that we made this liquidity sweep, but AU has been moving higher. And that just means that EU will soon follow. So it's just a six sister. But otherwise, that's it for today. I've talked about EU and AU. If you have any questions, please write them right now to me in the chat. Or if you have anything you want to say overall, or just you can just unmute and talk out loud if you have any questions. Hopefully this was insightful for y'all. I'll wait 5 minutes.